Joining us this morning in a CNBC exclusive is First Solar's CEO, Mark Widmar. Mark, it's great to have you. It's such interesting times right now in the business. There's a big argument that pricing and demand and even the business model sentiment is at an inflection point. How are you reading what we've been through this year in the space?
Look, I think on the utility scale space, it's been a very strong year, and it continues to be a strong year. Look, there are some sentiments and some challenges that are going on in the residential space, which really aren't applicable to us. We focus, and we have historically, over the 20 years of the company's existence, on the utility scale segment of the market. There's a lot of load growth going on in many parts of the U.S. You know, we're headquartered here in Arizona. We're seeing a significant amount of load growth here in the U.S., across other parts of the Southwest, going across the Southeast into Florida. And that's really what's driving a really robust, strong demand for us and our technology. Yeah, we booked slightly lower bookings last quarter, but still booked almost 7 gigawatts, which was about 65% of this year's actual production capacity. So we're still very encouraged, and we see very strong demand and robust pricing and a great environment as we continue to move forward.
How much of next year do you think is going to be about policy and elections that drive policy?
Look, since the Inflation Reduction Act, there clearly has been an influence and an impact, which is largely focused on the U.S. trying to create an environment where there's long-term energy independence and security, and creating a domestic industry that hopefully creates cycles of innovation. And that's largely what's been happening over the last year or so. At the end of the day, the policies are important, but at the same time, there's a fundamental need for energy. Solar is the lowest cost form of new generation. We're starting to see more solar integrated with storage, which is sort of expanding the addressable market in terms of the hours of the day where solar energy can be deployed and dispatched to meet the end consumer demand. So yes, there's a policy environment, but there's also a fundamental need in demand. But we have to keep them both in balance. I mean, it's clearly important to stay engaged and involved in policy at the state level and at the federal level.
Carl referenced the pricing. What's going on there in terms of pricing pressure in the business for the panels?
One thing to remember, we're pricing out really to the end of this decade. We have a multi-year contracted backlog that goes out to the end of this decade. So we are pricing forward. There historically is an environment where, as we move forward, we would expect technology advances to help drive the efficiency of our technology to a higher level, which will drive to a lower cost, which in theory drives to a lower ASP. So near-term pricing has changed a little bit in the U.S. We also sell quite heavily in India. India has been a market that pricing has held up pretty well. But as you go across the horizon, when you're selling out into 27, 28, 29, sure, you'll see a slightly lower price in an ASP environment. But what we just booked this last quarter was effectively a flat ASP to the prior quarter. So we've been very disciplined in how we're engaging the market, holding firm on pricing, and been able to be successful doing that.
What about the efforts to reshore solar and EVs from the Chinese market? How is that going? And what's the right way to do it when you think about how much it should cost and whether that cost makes sense with the economics?
So it's actually going extremely well. If you look at the U.S. market, we have, just as on our own, since the announcement of the Inflation Reduction Act, added about double our capacity that was planned at that point in time for the U.S. market. And others have done very similar things. And we were growing before even the Inflation Reduction Act was announced. We already were in the midst of adding another factory here in the U.S. and adding another factory in India as part of our Southeast Asia operations. But the opportunity now, with the announcements, if they were to come through, at least at the module assembly level in the U.S., will be more than self-sufficient to meet the demand expectations through the end of this decade. It needs to be done in a thoughtful, balanced way, strategic, insightful. The one thing I would say right now, we are a vertically integrated manufacturer. Therefore, we do the entire production process within the four walls of our manufacturing facility. Our competitors, which use a different technology, largely are only bringing module assembly into the U.S. market. And we need an enduring supply chain that is all the way from the production of the polysilicon, which is the very first step of the crystalline silicon production process, all the way through the module assembly. So what I would say right now is what's gapping, at least with our competitors, is that there's not enough vertically integration, such that when we get through the horizon for the Inflation Reduction Act, we have an enduring domestic supply chain that will enable cycles of innovation and will also enable the U.S. to be a technology leader and to export into international markets. So that's the only complaint I would say I would have right now is it needs to be a more vertically integrated supply chain. Again, First Solar is vertically integrated because our technology is different, but I'd love to see the balance of the industry to emulate what we're doing.